Yeah, I mean, I'm more in the camp that as the Fed gets closer to stopping hiking and maybe even pivoting in 2023 or 2024, I think the dollar has kind of front loaded a lot of its upside. And I think that, again, the Fed has shown that they're willing. One of the things that caught my eye was 2 Fridays ago. There was that Wall Street Journal article, basically, which the Fed has used to get information out through the Wall Street Journal. And they basically said they're going to raise 75 and pause, right? And then literally an hour later, after that happened, the Bank of Japan then said, hey, we're going to start buying yen and selling dollars and supporting. So it to me, it struck me as a very coordinated event, which means that the Fed is communicating with the ECB, Bank of England, Bank of Japan. And the amount of breakage that would occur if we did see this max pain dollar would be exponentially bad. So for me, I'm kind of in the camp that I actually am a little bit more bearish on the dollar, and that makes me more bullish on gold in the near term. Bitcoin, again, being a risk asset, I'm still a little iffy on, because I think if the stock market still has a lot of downside, like I think it does, then I still think Bitcoin does get hit just based on that, risk divergence or getting out of risk.
Hello and welcome to Wealthy Value. In today's video, President and Chief Market Strategist at InTheMoneyStocks.com Gareth Soloway updates about his outlook on market conditions and post-recession recovery. He also shares his outlook on the Bitcoin charts and what's coming next, a breakout or a major resistance. Gareth also explains the impact of the Fed rate hike on Bitcoin's price. Make sure to stick around till the end of this video, where Gareth Soloway predicts the next all-time high for Bitcoin and when it will come. If you are one of those people who are interested to buy and sell NFTs and earn amazing rewards at a reliable and secure marketplace, then we have a great news for you. Today's video is sponsored by Popcorn Markets, and this project is the first protocol on Aptos that uses an automatic market maker for NFTs. So what can you do there? Let us break it down for you. 1. You can instantly buy and sell NFTs. 2. You can contribute to pools of tokens and NFTs, earn rewards. 3. And avoid marketplace fees. To simply explain everything, Popcorn Markets is an AMM protocol for NFTs, which means that users trade indirectly through liquidity pools, rather than directly with one another. It is a similar idea to Uniswap. However, it applies to NFTs. Here's how it works. 1. NFTs are deposited into liquidity pools by liquidity providers. In addition to choosing whether to buy, sell, or do both, clients also select a beginning price and bonding curve characteristics. A pool, often known as a liquidity pool, is a smart contract that enables instantaneous asset switching between two different assets. A bonding curve is used by pools to calculate the relative cost of exchanging one asset for another. An asset becomes more expensive the more it is purchased from the pool. On the other hand, as more assets are added to the pool, they become more affordable. 2. After that, users can sell or buy NFTs into these pools. The pool's bonding curve determines how much it will cost to buy or sell another item each time an item is bought or sold. Assets can be deposited by liquidity providers, LPs, into single-sided buy or sell pools or dual-sided trade pools that purchase and sell NFTs, with an optional spread to collect trading fees. Similar to previous floor NFT protocols, Popcorn does not make distinction between various ERC 721 compliant IDs. No matter which NFT is sent into or out of the collection, pools that are prepared to purchase or sell NFTs will always return the same price. 3. Liquidity providers may alter the parameters of their pool or withdraw assets. This is totally ideal for any person who wants to grow in the NFT place. So if you're interested to know more about Popcorn Markets, then make sure to click on the links in our description box to get all the recent updates and news. Let's dive right into the video.
So if Bitcoin breaks above my 25K, yeah. So I mean, that's the big question is like, at what pivot point do you start to say, okay, this is the beginning of a new bull run? And again, for me, looking at the chart, that bearish pattern would get broken there around 25. But the problem is that just above that, you have this like huge area of sideways action, which is around 28.5. So it's hard for me, I guess, to suffice it to say, like, the way I play it, the way I'm a trader is, and this is more on the trading side, but let's say we break up here and we go there. So now you have resistance being hit. So yes, you've broken this. What I would probably then do, I wouldn't be a buyer here because I never like to buy into resistance. But what I would probably do is I'd expect a pullback to this line, which is also this high pivot. and then I'd be a buyer there. Now, again, whether or not I go like long, I'm not really a long-term trader, but at least that you could make a case for being a good support for another pop, maybe a move to the upside. But you're right in the fact that like every good trader looks at both sides, right? You can think that this is the side that's going to win or that you're going to be right on, but you also have to look at the other side and think, okay, well, where do I change my thesis? Where does my thesis fail? So I think that the market is pricing in the pause by us having this rally. Although today with the dollar popping, I think it's beginning a little bit more of a gray area. But I do think that a 50 in December would be a little much for the market to take. If the Fed said, hey, we'll do another 25 in December and then pause, I think the market would kind of be like, okay, at least they're pausing in 25, it's only 25. Yeah. But I think we'd sell off if they basically came out hawkish and said 50 again in December, or kind of alluded to that. And going back to what we were talking about politics and how the gridlock is best, what's fascinating is that while the economy is good, I think gridlock the market does like. But what you'd have to be intrigued by and think about is if we slip into a recession, and let's say it's starting to get to a bad recession, and the Fed can't print us out of it because inflation's so high, does then the market regret gridlock because then you can't get any spending bills to come out to stimulate growth? And it's just, again, I'm just thinking, 2, 3, 4 steps ahead, but it is interesting to think about that is that it doesn't allow for spending bills to come out that could actually stimulate growth. Yeah, so tomorrow's the big day, 2 p.m. Eastern time. That's when we're gonna find out what basically crypto's gonna do, what the stock market's gonna do, what the dollar is gonna do. Everything's gonna revolve and has been revolving around the Fed. And I mean, as of now, I think yesterday per the stats, it was an 88% chance of a 75 basis point hike. So the market already expects that, right? So the market expects 75. What the market's trying to figure out is what are they going to do after? And there's kind of this hope that they're going to take a pause for a few months and see whether or not the economy is supportive of further rate hikes. And that's kind of why we've rallied off the lows, at least in the S&P 500 over the last month or so, and with this hope that we do see this kind of pause. But what's interesting is today, we saw the markets open up. The S&P was opening sharply higher, and then some JOLTS data, which is some jobs data, came out, I believe, job openings, and the dollar started to rip because it was a strong number. And again, you could see this market kind of flipping back and forth between what's the Fed going to do? What are the likelihoods of a pause versus not a pause? So it's going to be really amazing to see tomorrow. I do think if I had to guess, I'm favoring a pause, not so much because of the US economic data, but because we've seen other foreign countries get very close to catastrophic issues. Like we know the UK pound was collapsing and the Bank of England had to jump in. Then we saw a couple Fridays ago, the Bank of Japan had to jump in to support their currency. And so my fear would be that if the Fed continues to hike, eventually they're going to break other countries. And I think that's a concern for the Fed. Yeah, that's kind of where I am, where it's like, and I gotta believe the Fed knows this, but we know that like it takes a certain amount of months for every rate hike to be reflected in the economy. And so considering we've done 3 75s already and tomorrow would be 4, how many of those have actually filtered into the economy? And is the Fed starting to get nervous that they might overdo it and then cause kind of a bigger recession or worse? And I think that's, at least for me, that's my big concern, is how much front loading have they done? And then if they keep doing it, at some point, things do break down. I mean, we all know this from history with Fed and the Fed and everything. Yeah, I always say that too, right? Is that, everyone's like, oh, bear market, it sucks. Well, yeah, if you're like a long-term investor, it's bad. And that's where I think we are. We're going to be in this kind of like sideways Brazil type market, where Brazil had this crazy move up from like 2002 to 2008. And then since then, it hasn't made a new all-time high since 2008. So I don't know if it'll be 14 years before the US does, but I bet it's close to 10. And I think, again, you're going to see this sideways move. But going back to what I was saying is that within bear markets, the best opportunities arise. I mean, think back to Bitcoin when it was at 3,500 in the last bear market, then it ran to 69,000, and you can see these type of moves. So again, everyone should just be aware is, long-term investing may need to take a pause. I feel like they've been they've had their day in the sun, right? Ever since the Fed was printing money, you could have just gone long and been happy. But now it's time for us swing traders to really emerge. So like one of the interesting things about the S&P chart here on the spiders is that we've had a pretty decent rally and we're kind of just up into this resistance now, right? So it's interesting because we're right into this level coming into the Fed. So you're either going to get a breakout where the SPY then goes up to this longer trend line that stretches down from the all-time highs, or the Fed's going to disappoint the market and then we're going to see this crazy drop back down where eventually I think we're going to this area over here, which was that pre-COVID February 2020 high. So it's really kind of showcasing, and I love how charts do this. They bring you to this point, and then it kind of coincides with this epic economic data or Fed decision or earnings announcement. And it's like, okay, well, it's either going to be a blast off or a crap out. And I'm leaning towards a little bit more upside. But at the same time, I got to respect the fact that we are into some resistance here on the charts. I'm not in that camp personally, but one thing I know is that, I know nothing in terms, Bitcoin can do anything it wants, but at least per the charts, I'm definitely more in that groove of thinking the max upside here would be kind of around the 25,000 level. Yep. And if we take a look at the chart, that would basically be taking us to the high end of this channel here. So we have a channel on Bitcoin. If you connect these highs, well, number one, the lows connect right out, then the highs, and it's this beautiful kind of bearish channel. And I think what's interesting about a bearish channel is that if we did rally to 25, guess what's going to happen? And you guys know this, like everyone's going to get bullish, yep. But you're still within the channel, which is a bearish channel inside the last move down. And so it's almost ironic in that way of it has to sucker in enough people before you can get that next dump. So again, I'm not sure if it'll go to 25, but we are making what I would consider a small micro bull flag here, or in spirit of bull flag, which at least does favor some upside, maybe to 22.5, which would be first resistance here, and maybe upwards of that 25 level. But I'm still in the camp personally that I still don't think we've reached bottom. Being through the tech bubble back in 99, 2000, 2001, and the similarities with the dot-coms, it's just crypto is just too. It would be too weird to. It's not enough of a flush out to get to finish out crypto yet to put in a bottom, in my opinion. Yeah, a little bit on the altcoins. Like I play around. My biggest core positions are usually ETH and Bitcoin, but I dabble in a little Solana, Avalanche, Cardano, Polkadot. Kind of like the second tier, not the biggest ones, but I just play around because those obviously percentage wise, you're going to get a bigger bang for your buck out of them than Bitcoin or Ethereum. So I do definitely play with those a little bit. And then, I like keeping an eye on some of the new ones, like Quant is kind of an interesting one. Yeah. That's had a major run. I love the head and shoulders, the inverse head and shoulders that it had and how it played out to target. And basically I'm keeping an eye on it in terms of if we get a retrace here, this would kind of be my zone for rebuy or buying it. So right around like 120, 125 right here, if it pulled back there, that should be a pretty good support. You can see this shoulder, head, and then shoulder, and then breakout. And I think the coolest thing about this is for those people out there that, just some of the cool stuff about technical analysis is to calculate the breakout target, take the lowest point of the head and draw a vertical to that line. And that distance will be the same generally, unless nothing's perfect, but in general, and it turned out to almost be to the dollar. That's the same distance there to there, and that's where you topped out right there. So kind of cool stuff in terms of technicals about how things work. And then for me, I honestly didn't even look at this chart until it was already breaking out. So by no means did I participate on the bullish side, but now it's on my radar where if it pulls back here, then I likely would be interested in buying it. Yeah, I've always been a believer that the charts always kind of predict, much the same as magic, is that you see a pivot in a chart and then, or you see a resistance coming in and then you don't know what's going to be the trigger for the pullback, but then all of a sudden like a news story breaks, right? Yep. Or something like that. And it's just kind of cool how that stuff happens. So, looking at the charts, I definitely think that's the predictor about what will happen. And I've never found, one of the things with, when you talk at like midterms and this is sometimes, especially when it comes to politics, it brings in emotion, right? And emotion can be the downfall of the best investors in the world. So I definitely, I pay attention. Like I'm definitely on the zone of knowing what's coming up. Like, okay, when's the Fed? When's the midterms? But I try not to let it play too much into my analysis as it can start to kind of shade things a little bit.
So What are your thoughts about Gareth's perspective on Bitcoin bottom and market structure? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.